All right, ready to dive into today's business world. Let's break down this pasted text front page, October 16th, and see what really matters.
It's quite a mix. We've got global power moves, some shaky ground in tech, and yeah, even a little corporate drama sprinkled in. We'll connect the dots for you.
Sounds like a plan.
Okay.
Right off the bat, JP Morgan CEO Jamie Dimon setting his sights on Africa. Expansions into Kenya and Ivory Coast this year. Bold move, but is Africa the right playground for this?
Well, Africa's a gold mine for financial services, or at least it has the potential to be. It's not about the established markets so much anymore. Businesses are hunting for that next growth spurt. And Africa, young population, expanding rapidly. It's got the ingredients, but...
There's always a but, right?
Yeah.
What's the catch?
Well, political instability is a given. You've got regulatory hurdles, infrastructure limitations, and more of a minefield than a walk in the park, that's for sure. JP Morgan will need to be on their toes.
High risk, high reward. Makes you wonder who else might jump in if they pull it off. Okay, let's jump over to the tech world. Remember ASML. They're basically the backbone of chip making, and their latest warning has everyone on edge, slashing their 2025 projections, saying there's weakness in some major markets and not just in AI.
This is where it gets really interesting, right? See, ASML, they're the supplier for these extreme ultraviolet lithography machines. Basically, they make the most advanced chips possible, the kind that's been fueling this whole AI boom we're seeing. So if they're seeing a slowdown that goes beyond just AI, well, it makes you question the direction of the entire tech sector, doesn't it?
So not just a little blip, more like a potential earthquake.
It's a little early to say for sure, but yeah, the ripple effects are definitely there. Orders getting delayed, demand softening. It paints a picture of, well, caution, even for the big tech players.
Speaking of big tech feeling the heat, Intel's in a tight spot. A Chinese cybersecurity group is calling for a security review of their products, saying they're causing constant harm to China's national security.
Oh yeah, this is straight out of a geopolitical chess match playing out in the tech world. If this thing escalates, we could be looking at an all-out trade war, which would really fragment the global tech landscape even more than it already is.
Definitely some high stakes there. All right, enough doom and gloom for now. Let's talk about someone who's actually flying high. United Airlines just announced a $1.5 billion share buyback program. They might be feeling pretty good about the future.
Yeah, strong travel demand and better pricing power are definitely the winds beneath their wings right now. This share buyback, it's a pretty clear signal to investors. They're betting on themselves, aiming to boost those share prices and reward anyone who's stuck with them.
Smart move. Now, from a company soaring high to one under the microscope, Goldman Sachs' CEO in Saudi Arabia is stepping down. Rumor mill's working overtime on this one.
Bit of a head scratcher for sure. Some say it's tied to Saudi Arabia's push to diversify their economy. Others think it might be internal issues within Goldman Sachs itself. Definitely one to watch, because any instability within Goldman Sachs tends to ripple outward, affects global finance as a whole.
Like watching a corporate thriller unfold.
And speaking of twists and turns, the legal battles around Meta are heating up. A California judge just ruled that they have to face those lawsuits, alleging that Facebook and Instagram are harming teenagers' mental health.
This is a big one. This could set a precedent for holding social media platforms accountable, for the actual impact of their algorithms, their content moderation, especially when it comes to vulnerable users like teenagers.
So no more hiding behind that we're just a platform argument.
Exactly. This ruling kind of implies that, they have a responsibility to reduce harm, to actually think about the well-being of their users as much as their bottom line. It's a question that's been hanging over big tech for a while, and this could be a turning point. Definitely one to keep an eye on. And while we're on the topic of corporate responsibility, Boeing's under the microscope again. A judge is looking into whether their diversity policies actually influenced how they chose an independent monitor for that plea deal related to the past fraud charges.
It's a really interesting case because it highlights this complex dance between corporate governance, legal accountability, and, social responsibility. Can a company truly put diversity first without raising questions about fairness and meritocracy? It's a tough line to walk, and Boeing's right there in the spotlight.
A very delicate balance, for sure. And speaking of balance sheets, how about some earnings talk? J.B. Hunt Transport Services, the trucking giant, they just blew past Wall Street's expectations with their latest profits.
And that's significant because, generally speaking, when you see increased shipping volumes, like what J.B. Hunt is experiencing, it's a good sign, often a leading indicator of broader economic growth, actually.
So a little glimmer of hope amidst all the uncertainty.
It's one data point, sure, but a positive one nonetheless, suggests that at least some sectors are showing some resilience, even with the economic headwinds.
That's good to hear. And it's not just trucking showing signs of life. Omnicom Group, they're the advertising and media powerhouse, and they're having a pretty stellar quarter, too.
And Omnicom's success is telling, you know. Their strong performance, especially in brand advertising, indicates that there's some renewed confidence in the market. After all the uncertainty, you've got businesses willing to invest in growth and marketing again.
Putting their money where their message is.
Exactly. It's a sign that companies are ready to differentiate themselves, to fight for market share as the economy tries to find its footing.
Definitely a smart move in today's competitive business world.
Absolutely.
All right, let's take a quick pause here to gather our thoughts. Don't go anywhere, though, because when we come back, we're diving into even more insights from the front lines of business and finance. And we're back. Before the break, some glimmers of hope in the market. But let's switch gears for a sec and talk about a company trying to, well, revamp its image a bit. New York Community Bancorp. They're rebranding, going with Flagstar Financial now. I think a new name can really erase past struggles.
Well, rebranding can be powerful, that's for sure. But in NYCB's case, it's more than just a fresh coat of paint, right? They're trying to distance themselves from that old identity, hoping to signal stability and growth to investors who might be a bit hesitant otherwise.
A corporate makeover,
Yeah.
hoping for that Wall Street comeback story. And speaking of Wall Street, this next one just screams questionable decision-making. Paramount Global's board is giving their 3 co-CEOs massive bonuses, even if those CEOs are gone before those bonus checks clear.
Yeah, it really highlights this whole debate around executive compensation, doesn't it? Are these CEOs being rewarded for actual performance, or is it just a golden parachute no matter what happens with the company? It creates a perception problem, especially when, let's face it, a lot of everyday workers are struggling.
It's a tough look, for sure. Speaking of tough situations, Ryanair, the European budget airline, they're not mincing words about their issues with Boeing. Seems those delayed aircraft deliveries are throwing a wrench into their growth plans.
It really underscores how interconnected these global supply chains are and how one disruption can have a domino effect. Ryanair, they need those planes to expand, to take advantage of the travel rebound. But Boeing's delays are holding them back. Proof that even the giants aren't immune to these logistical headaches.
One delay impacting the whole system. And while we're talking disruptions, Stellantis, the auto giant, is dealing with a massive recall. Over 20,000 hybrid SUVs because of a brake pedal issue. Safety first, of course, but that's got to be a logistical nightmare.
Recalls are never good, that's for sure. But Stellantis seems to be acting quickly to address this. And that's key. It might be costly, but this proactive approach is crucial for maintaining consumer trust and minimizing potential harm.
Absolutely. Better to face it head on. Now let's zoom out a bit and look at the bigger economic picture. Procter & Gamble, household name if there ever was one, is projecting pretty lukewarm revenue growth for their next earnings report. If even P&G is feeling the squeeze, what does that say about the average consumer?
P&G's projection is a reality check, plain and simple. It tells us that even these global giants, even with well-established brands, they're grappling with economic uncertainty, with the fact that consumer spending habits are changing, people are being more cautious with their money, and that has a ripple effect, no doubt.
It's a good reminder that no company, no matter how big, is immune to the winds of change.
Exactly. Adaptability, that's the name of the game in this market.
Couldn't agree more. Let's take a quick pause to gather our thoughts and get ready for the final stretch of our deep dive. Stay with us, we'll be back with more insights in a flash. We're back for our final stretch of this business deep dive. Ready to hear what the analysts are saying about some of the heavy hitters? Always interesting to see where the so-called smart money is putting their faith.
Yeah, analyst predictions, it's like a peek behind the curtain. Not about having a crystal ball or anything, more about understanding the data and trying to anticipate those future moves.
Right, so who's catching their eye?
Well, Bank of America is getting some love from KBW. They've upped their target price after a pretty strong third quarter, especially when it comes to net interest income.
For those of us who aren't Wall Street wizards, remind us what makes net interest income so important for a bank like BofA.
Basically, it's the difference between what the bank earns from loans and what it pays out on deposits. So KBW, they see BOFA's strong net interest income as a sign of profitability. Stability, too, which is huge in these uncertain economic times.
Good news for BofA investors, then. And it looks like Citigroup is enjoying some positive attention, too. BofA Global Research raised their target price, pointing to the bank's higher fee revenues.
Citigroup really shows you the power of a diversified business model. While some areas might be struggling, their fee income from things like investment banking, wealth management, that's providing a nice cushion.
Diversification as a hedge against uncertainty. Smart move in any market. Now, even with that leadership change we talked about earlier, Goldman Sachs is still getting a vote of confidence from Barclays, bumped up their target price, saying those third-quarter earnings were better than expected. And get this, driven by strong investment banking revenue.
Goldman Sachs, they've got a knack for navigating tough markets, that's for sure. This just proves how strong their brand is, their connections in the finance world. Even with all the volatility, they're still a dominant force.
Titans don't go down easily. All right, switching gears to healthcare. Johnson & Johnson is seeing their target price boosted by Bernstein. Seems their innovative medicines are surpassing sales expectations. Proof that research and development pays off.
J&J, they're a perfect example of how innovation drives success, especially in healthcare. They're constantly pushing the envelope, bringing new treatments to market. That's how you stay ahead.
Innovation is key, especially in a fast-paced industry like healthcare. But it's not all sunshine and rainbows, right? United Health Group, another big player in healthcare, just had their target price cut by Jefferies.
Yeah, this downgrade comes down to concerns about their projected profit margins for 2025. They've taken a bit of a hit from disruptions in the Medicaid market, and that's affecting their bottom line.
Another reminder that even the leaders aren't immune to these shifts in the healthcare landscape. Unpredictability seems to be the only constant these days.
You got that right. Adaptability and strategic planning are more important than ever if you want to navigate the complexities of today's business world.
Couldn't have said it better myself. Well, that wraps up our whirlwind tour of the business world. We covered a lot today, from global ambitions to tech sector shakeups, corporate drama, analyst predictions, you name it.
It's been great. It really highlights those interconnected forces shaping the global market. Staying informed, thinking critically, adapting to change, those are more vital than ever for success.
Absolutely. So here's a final thought to leave you with. In a world full of opportunities and disruptions, where do you see the greatest potential for growth, for innovation? And how can you use that insight to thrive in this constantly changing landscape? Until next time, stay curious, stay informed.